Yeah, awesome. Well, I want to talk about two things today. Firstly, uh, three reasons why founders might choose to run a equity crowdfunding campaign, and then secondly, three factors that we at Wefunder have seen determine success of a campaign. Before I get into that, just to quickly introduce myself. I lead the fundraising team at Wefunder, so my job is to talk with amazing founders who are considering raising capital and persuade them to do that with us at Wefunder. I've been here for 3.5 years. It's been a hell of a ride, a roller coaster, seeing the growth of the industry and Wefunder during that time. And with the law changes to regulation crowdfunding of March of this year, we're seeing very, very explosive growth right now, which is really exciting for all of us. Before Wefunder, I was at Kiva.org, which is a nonprofit. I founded and led the US team there for 7 years. And before that, started my career in strategy consulting with a firm called Oliver Wyman. From the UK originally, lived 10 years in San Francisco, and now based here in Nashville, Tennessee, with my wife and 3 kids. So that's me. But to get back to the three reasons why, as a founder, you might consider running an investment crowdfunding campaign. The first is to raise more money more quickly. So what these new laws, regulation crowdfunding, allow you to do as a founder is a couple of pretty interesting new things that can help you accelerate your fundraising. The first is, as well as raising from accredited investors, and on Wefunder, about 50% of investment volume is coming from accredited investors, you can now also raise from unaccredited investors. Accredited investors, household wealth of $1 million or more, excluding your primary residence. This is just 5% of the population. So by allowing you to raise from your customers, your LinkedIn connections, your friends and family, everyone, the number of people that can invest in you goes from 5% of the population to 100% of the population. And then the second interesting thing that regulation crowdfunding allows you to do is publicly promote your offering so that you can tell the world that you're raising capital rather than privately soliciting. So you can post on social media, you can send an email blast to your customers, you can go on a webinar like this one or a podcast, you can put out a press release. And so the combination of being able to raise money from everyone, not just rich people, and also publicly promote your fundraising rounds are two powerful ways that raising capital in this way will help you raise more money more quickly. Another way is that you can get in front of Wefunder's investor base. We have well over 1 million registered users now, and the amount of capital that they bring to bear on campaigns varies, but it's typically close to half of money is coming from existing Wefunder investors. So a half you might bring, and then a half Wefunder brings. So these are several pools of capital that you're able to tap into by running a Wefunder campaign that you just wouldn't be able to if you were trying to fundraise using Regulation D, 506B, and privately soliciting accredited investors, angel investors. I think raising money on a platform like Wefunder is also a pretty efficient way to fundraise. So normally you're meeting with angel investors for coffee, you're regurgitating the same pitch deck. As a CEO, your time is the most valuable in the whole company. And that time is spent regurgitating the same pitch deck, the same slides, the same conversations again and again. And that is, unfortunately, oftentimes unavoidable, even with when you're raising on Wefunder. But you can also then send an email, direct people to the website, and they check out with a credit card in a few minutes without taking any of your time. So it can also be a very efficient way of fundraising as well. So these are several ways in which running a regulation crowdfunding campaign can help you as a founder raise more money more quickly. The second reason to run a equity crowdfunding campaign is to recruit an army of champions. When you raise $5 million from 5,000 people on a platform like Wefunder, that is 5,000 potential customers. 5,000 people that can help you to hire an engineer that you're trying to recruit, 5,000 people that can give you product feedback, 5,000 people who have a financial stake in your success and are financially motivated to help you. So we've seen some of the best companies on Wefunder, they haven't even needed the money. For them, it wasn't about the capital. It was about the customer engagement of existing customers, and the acquisition of new customers. Both of those things combined, I sometimes talk about running a Wefunder campaign as the best marketing campaign you will ever run. You get in front of new eyeballs, which is customer acquisition, and it's an incredible way to build loyalty and affinity with your existing customers. Great example of this recently on Wefunder is Mercury Bank. So they actually raised $10 million in just a matter of hours, exclusively from their customers. They have 40,000 startup founder customers, and they were really excited to give those customers a chance to invest in their bank, their company. They didn't need the money. They just raised 120 million from Co2 and Andreessen Horowitz and other VCs. So they had their smart money from VCs. They then wanted to complement that with money from their customers, because they thought that would turn them into more loyal customers and more passionate ambassadors for the Mercury brand. The third reason, I think, to run a Wefunder campaign is a little bit more intangible and abstract. We are a public benefit corporation at Wefunder, we're a B Corp. We're all pretty mission oriented and doing this to help founders raise more capital and help everyone participate in the wealth that's being created by startups, not just rich people. And so as for some founders that kind of buy into that mission, as well as having VCs invest in them. And for me, it's definitely it's not an either or thing, right? You can have institutional investors, VCs, alongside the crowd. It's not a binary thing. But they have VCs that are, if they build a big unicorn company, those VCs are going to make a lot of money. And so some founders get excited about the idea of, okay, well, if I'm going to make money for these rich people over here, what if I could also make money for my community, my customers, the people that supported me in the earliest, most fragile days of the company? And wouldn't I want to dedicate the next 10 years of my life to building wealth for those people, as well as my institutional investors? Kim Lewis is the founder of CurlMix, who are live on Wefunder right now, and she's talked about this a lot. She has these aspirations of building a really large company, and she's had a lot of her community members, customers invest in her, and she's really excited about trying to build wealth for her community, as well as her more conventional investors. So those are the three reasons why a founder might choose to run a Wefunder campaign: raise more money more quickly, recruit an army of champions and brand ambassadors, and then thirdly, enable your customers and community members to benefit from your growth and success, as well as some VCs. And so then second part of the talk I wanted to touch on is three factors that determine success in a Wefunder campaign. And the first is it a good investment? Which hopefully goes without saying. But if you would really struggle to raise from conventional investors because it's just not a good investment, which could be your valuation is way too high, or when investors want to see a growth rate that's up and to the right, you are totally flat or going in the opposite direction, or there's nothing kind of in your team that says you should be founding this company that has aspirations of global domination. So the kind of things that any investor looks at: traction, hockey stick growth, the team, the size of the market, total addressable market, the terms of the offering. I also, with Wefunder campaign, what the campaign page looks like, I think is very important as well, right? So that is the product, that is the investment that people are investing in. We tend not to over-index on the video, but it needs to be polished, it needs to jump off the page, it needs to grab the attention of someone that lands on your Wefunder fundraising page. So firstly, is this an investment that is a good investment objectively? The second factor that's going to determine success of your campaign is the audience that you have. So we have many B2B companies or many kind of pre-launch companies that didn't have an audience yet, that raised $1 million quickly on Wefunder. So it's by no means a prerequisite to have all three of these things. You can certainly be successful on Wefunder without a huge audience, but it certainly helps. And I kind of highlight, three aspects of an audience that are going to, determine how receptive that audience will be to your Wefunder campaign. The first is obviously the size. So if you have a huge audience of 1 million people, that's just more people that you can market the campaign to. Goes without saying. The second is the quality of the audience in terms of how much they love you. So if they are really, really excited about what you're doing, then when presented with a chance to invest in your company, they're going to jump at it. A good example of that recently on Wefunder was Rome Research. So they raised $1 million very, very quickly in a matter of hours on Wefunder. And I think the biggest reason for that was their customer base, which was also pretty large, but their customer base was absolutely passionate about the product. And so when given a chance to invest in that product, they jumped at it. I think Wefunder is another good example of that. We raised recently $5 million, the maximum in regulation crowdfunding from our own investor base. And again, when we present our users who really like our mission, really like what we're trying to do in the world, when we present our users with a chance to invest in Wefunder, they jump at it. So how much do your customers love you is, I would say, one of the most important factors in determining success of a regulation crowdfunding campaign. And then also, I guess, how likely they are to invest in an equity crowdfunding campaign. So that's going to be, honestly, at the end of the day, do they have disposable income to invest, firstly? And then maybe secondly, their familiarity with investing, or their kind of openness to technology or financial innovations. So I think Mercury Bank is another is relevant again here. Their customers were 40,000 startup founders, and startup founders tend to love Wefunder because this is actually why our founders, who were serial entrepreneurs, started Wefunder. Was they wanted to invest in their friends' startups, but they weren't yet accredited investors. They weren't millionaires. And so they weren't able to, and so they loved the idea, even as kind of scrappy founders still hustling, the ability to invest in their friends' startups for $100, $200. And so I think Mercury's customer base of startup founders were very, very high propensity to invest in Wefunder campaign. And their campaign, they raised $10 million in 5 hours, which was pretty explosive. So the first reason, or the first factor that drives success is it a good investment? The second is the size and the quality of the audience that you have. And then the third is going to be a word I just use, hustle. So as a startup founder, you can actually compensate for the first and the second points. If you have an investment that maybe it wouldn't wow, the best VCs in Silicon Valley, maybe your audience is still being built up. But you can compensate for those with, creativity, energy, drive, determination, and just kind of pounding the pavement. And so, are you going to take every meeting? Are you going to appear on every podcast? Are you going to send every email? Are you going to, put in place a marketing plan where you have a drip campaign of emails? Are you going to engage on social media, et cetera, et cetera, et cetera? And so, a really great example of this, I think, is my friend Max Tuchman from Caribou. She raised $1 million, actually, I think it was 1.7 million on Wefunder back in, I want to say 2018, 2019. And she just was a whirlwind of energy for the 2 or 3 months of her campaign. I would be, exchanging emails with her late at night. She was always up. I was, working at like 10 p.m. on the West Coast, and she was still up at 1 a.m. on the East Coast, just working super hard and hustling hard. And so for me, those are the three factors that will determine success with your Wefunder campaign. Firstly, is it a good investment? Secondly, the size of your audience. And then thirdly, can you bring the energy, the creativity, and the hustle to make it happen?